If you're thinking about purchasing a property, there are different loan programs for first-time home buyers, for investors, people with lower credit scores, people with higher credit scores, right? Different loan programs are made to fit your needs. So let's go through that. So if you're just starting out, FHA is going to be your first option where your credit scores can be on the lower end, 580, where you can put down lower amount, 3.5% down payment. And your debt to income ratio, it could be on the higher end. So basically, this is going to be for a first time home buyer who's just starting out, right? And with lower credit scores, lower down payment. But there are better options than FHA. What I don't like about FHA is your upfront cost of 1.75%, which is can be financed, but you're still paying for it, right? And your mortgage insurance. If you put down 3.5%, that means your mortgage insurance is never going away. It's there for the life of the loan. If you were to put down 10% or more, then it goes away after 11 years. And you must live in that property for at least 1 year, right? And the second option is your conventional. This is when you have 620 credit scores. Again, you can put down 5% down payment. Depends on how many units are you purchasing and if you're going to live there or it's going to be for investment. So let's go through the down payments for that. If you're going to live there and it's a single family, then you can put down 5%. If you're going to live there and you're buying a two family, then you need 15%. If you're going to live there and you're buying 3 or 4 units, then you need 20%. If you are not going to live there, this is going to be a rental property for investment, then for 1 unit, you need 20%, or 2 or more units, 25%. Okay. So again, if you are a first-time home buyer, a conventional loan might be a good option as well, where you don't need 20%. If you're buying a single family, 5% is good enough. And your DTI can go up to 49% there. Okay. One thing I do like about this compared to your conventional, compared to your FHA, conventional is a little bit better because your mortgage insurance goes away and that 1.75% that we spoke about is not included in your conventional loan, okay? And then you have your HomeReady and Home Possible. Also conventional loans, similar guidelines, but you can put down as low as 3%. What's the difference here? One is your income. Your income needs to be 80% or below your 80 and medium income if you qualify, right? And same thing, your mortgage insurance does go away and you can put down as low as 3% there, okay? Next is for investors. You're not going to live there. We're not checking your income. We're simply looking at the property's rental income and seeing if that rent can cover your mortgage. In that case, you do need higher credit scores, 700, 720. Some lenders may allow 690, but you do need 20% or more. If you're buying 1 unit, 20%, 2 or more units, 25%. Again, we're not checking your income at all for this type of loan, okay? Next is your bank statement loan. On the higher end, non-QM, 700 plus credit scores, 20% down payment. We're simply looking at your bank statements for last 12 months or 24 months, and we're qualifying you based on that. Also, we have non-QM 1099. We look at your 1099, how much did you make from there, and we can use 90% of your gross income when it comes to 1099 program there. Similar guidelines to what we just discussed up there, okay? Then you have is FHA 203K loan, right? This is a one loan where you can purchase and renovate the property up to $75,000. Very similar guidelines to your FHA up there, okay? So if you're thinking about purchasing, there are different loan programs. Give us a call and so we can discuss in person which one you may qualify for.